Hello, my name's Chris Downham from Simplicity Financial Services, and this is our November 2011 mortgage update. I've just returned from a mortgage conference, Mortgage Vision 2011. It involved the main players in the UK mortgage market. During the day I was involved in many discussions regarding the future direction of the mortgage market. I'll now take this opportunity to briefly update you on developments over the last month and also tell you where we feel the future is headed. This video is intended for clients and not for professionals in the mortgage market. In our October update, we said that we thought that fixed rates and tracker rates that were in the market then were not going to get any better, and we were right. Although the chances of a base rate rise anytime soon are rapidly diminishing, the actual costs of banks getting funds to lend is more expensive, and hence in October we've witnessed a slight increase, only a slight one, in the increase in mortgage rates. This is both for trackers and fixed rates. We still believe that if you can, now is a great time to look at fixing your mortgage for the next 4 or 5 years or longer, or moving from an uncompetitive standard variable rate to a 2-year low-cost tracker, or even a lifetime tracker, as long as you've got the option to move to a fix at the right time. I warn you again that money will not be this cheap for much longer, regardless of what happens with the Bank of England base rate. At the conference, all the speakers were fairly hopeful that we've now reached the bottom of the curve and that things may soon be improving. An example of some cautiously bullish words were, hopefully we're potentially at the cusp of recovery. Hardly a ringing endorsement that the good times are back, but better than complete doom and gloom. 2012 is looking like being another nothing year. The experts' opinions are that property prices will remain static and that interest rates will be going nowhere. If we're going to dig down a little more into property prices, they're predicting a slight rise in London and the home counties and a slight drop in Northern Ireland, Wales and Scotland. In 2007, there were 34,000 mortgage brokers, not actually that many, but now our numbers are less than 10,000. We're an endangered species, so make sure you look after us. Seriously though, despite the huge drop in mortgage broker numbers, we still account for 50% of the entire lending market. So those who have survived are very, very busy. I believe the cream of the mortgage broking crop have survived and are now excellently placed to serve the needs of their clients in a market where independent advice is more important than ever. Just to give you an idea of how lending has decreased over the last few years. In 2008, mortgage lending was over £300 billion a year. In 2011, it'll only be a measly £130 billion, and this is expected to be the same in 2012, before increasing slightly, hopefully, to about £180 billion in 2014. Despite the doom and gloom, there is some good news. The average mortgage has never been so affordable. It's now accounting for only 27% of disposable income. Also, in all regions of the UK, it's now cheaper to buy than it is to rent. This is comparing the monthly cost of renting and having a mortgage. It does not take into consideration the massive long-term benefits of actually owning your own house, and hence not having to pay rent in retirement, a big saving, allowing you to enjoy your golden years. Clearly, there are still many good reasons why people do rent. Being unable to get a mortgage or not having a deposit are amongst the most cited reasons. However, some lenders now have mortgages where you don't need a deposit or only need a very small deposit. And hence, it's not really up for you to decide without having the knowledge if you are eligible or not for a mortgage. The best thing to do is to consult an independent professional like me. So in summary, whatever your position is, you must get independent advice to help you make the right decision. Money is not going to be this cheap for long, and hence there is no better time than now to start taking action to secure your financial future. Property prices and interest rates remain stagnant, and they're likely to do so for the whole of 2012, maybe even 2013. If you want to speak to us, me, Chris Downham, then please give me a call on 0845 688 6168 or click onto our website below or www.simplicityfinancial.com. I look forward to helping you. Thank you. Goodbye.